How bad was Hims and Hers latest earnings report? The stock is currently sitting below $40 now, sitting at a 6-month low, $39.78. Is it over for Hims and Hers? Is the hype done, or is this a great entry point? Here are the top takeaways from the Hims and Hers Q3 2025 earnings report. Let's get right to it. So we'll start off with total revenue coming in at $599 million, up 49%. Everyone's freaking out because the growth has slowed down a lot. For the past year, as you can see right here, they were growing over 70%, huge slowdown in the top line, and also earnings per share coming in at 0.07, down 80% year over year. This is the first quarter in 7 quarters that they reported a year over year decline on the earnings per share. The profit margins has also dropped to 73%. We go down to the free cash flow. Cash flow from operations is actually still sitting at all-time highs, posting $148 million versus $85 million from the previous quarter. That is up 74% year over year. And lastly, going down all the way to net income, posting $15.8 million versus $75 million from the previous year. That is down 79% year over year. And so just from looking for this short-term data, some of the biggest misses this quarter was net income, the margin headwinds they are experiencing, and also the miss in earnings per share. Now, those are going to be the main surface level reasons why the stock is down more than 36% this past month. So let's start with the profit margins. Why did they drop from a peak of 82% in profit margins down to 73%? So they do talk about that in the earnings report. One of the main reasons affecting the decline in their margins is the expansion of their facilities. In the coming quarters, we expect our operational footprint and capabilities to continue to expand. We entered the year with a facility footprint of just under 400,000 square feet, and they expect to leave the year with a footprint north of 1 million. They have also launched new specialties and products. The main one, testosterone for men and menopause for women. They have been pretty quiet about it, but they have also launched at-home lab testing kits. And lastly, of course, with the acquisition of Zava into the European Union, the integration of Zava into the Hims and Hers platform has also affected their margins. Now, with the heavy investment in facility expansion, the launch of new specialties and products, and also the integration and acquisitions of these new smaller companies, these actions will all result in higher operating costs and substantial spending on capital expenditures, which of course is going to affect some of the numbers that they have been posting. But despite all these increased costs, operating cash flow remains strong in Q3, still posting $148 million. And this is all thanks to continued total revenue growth. They are just positioning themselves to accelerate their growth in the coming years. And at the end of the quarter, they still have over $1.1 billion in cash. So although the margins declined, Hims and Hers is pretty much saying this is a temporary contraction and it will normalize later on as their facility and product line scale. Feel like this year and next year will be an investment phase that Hims and Hers will be going through as a company. All this cash that Hims and Hers is generating is being plowed into capital expenditures for infrastructure, technology, international expansion, and strategic deals later on. This is all by design for the long-term shareholder, and they want to keep their leadership. They're playing the long game, guys. If you don't have a long-term view of a stock, these short-term fluctuations are going to freak you out. I feel like at a $9 billion valuation, buying at these levels gives you a great margin of safety compared to buying it at these peaks up here at $62. You want to buy when everyone is fearful right now, and a lot of retail has abandoned this stock. I feel like 2026 is going to be a big year for Hims and Hers as institutional ownership is sitting at an all-time high. Retail is selling to the institutions. In the long run, this stock is going to be fine. It's still one of the best growth companies out there. But let me know what you guys think in the comments below. Are you still in Hims and Hers, or is it time to sell? Thanks for watching this video, guys, and we will see you on the next one.